Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states, including yours. I'm glad you joined me. We're going to talk about the granddaddy of all annuities, single premium immediate annuities, and why they work, why they continue to be the most efficient, most pro-consumer annuity type, in my opinion, and that's important because my opinion matters in the annuity world. They just are to me, they're the simplicity that needs to be there with annuities. Now, they're not the sexy sell, the bad chicken dinner sell. They're not the ones that you see promoted on TV commercials or radio ads. That should tell you all you need to know. All that means is there's no moving parts, there's no annual fees, and the commissions are low, and they do exactly what they say they're going to do. Single premium immediate annuities. We're going to go over everything about them and why they work and why you should always look at them. But we're also going to talk about benefits and limitations as well right after this. I always tell people that never buy an annuity that you cannot explain to a 9-year-old. No offense to 9-year-olds. Here's my explanation to a group of 9-year-olds. If we go back to school, at the time of this taping, we're in the COVID, we're not even sure people are going to go back to school, but let's just assume, and I think that's second grade, those 9-year-old kids are out there, and I'm standing up there as the annuity man, and I go, okay, kids, there's this annuity called a single premium immediate annuity. And here's how it works. And they're all looking at, okay, Mr. Annuity Man, you tell us exactly what it does, and we'll listen. And so here we go. You give the annuity company the money, okay? And what they do is they pay you back a lifetime income stream. So if you live forever, kids, it's going to pay you forever. If you lived 150, it's going to pay you for that long. Oh, that's great, Mr. Annuity Man, because that's a long time. I mean, that's just unbelievable. Now, here's another thing, kids. The older you are when you start the income stream, the higher the payment. So just like your Social Security for out there for all you non-kids, the older you are, the higher the payment. By the way, Social Security is an annuity. It's the best inflation annuity on the planet. So I'm standing there still in front of the kids, and Johnny has a question. Yes, Johnny, what's the question? Mr. Annuity, what happens if you die? Does the evil annuity company keep the money? No. They don't have to. That's called life only, Johnny. Good question, Johnny. Very good question. You're going to be a very good advisor down the road when you graduate from college. But you can structure the annuity so that 100% of any unused money goes to your listed beneficiaries. You can have it go cash, lump sum refund. You could have it payments going to the beneficiaries so that they don't show up at your funeral in a Ferrari that they paid cash for. But the bottom line is it's a transfer of risk policy. And every one of the 9-year-olds goes, I get that. You're kind of giving them the risk. Exactly, 9-year-olds. And I'm trying to dumb it down a little bit because I don't want you to make it difficult. The older you are, the higher the payment. It's simple. If it's single life, you're going to have a higher payment than if it's joint life. You can use it in an IRA, a non-IRA, a Roth IRA. It doesn't matter what account you use because it's just the taxation of the income coming out is what would be different. So single premium immediate annuities have been the most efficient pro-consumer product, in my opinion, of all annuity types. Now, the fortunate part about that is single premium immediate annuities have cousin products, deferred income annuities and qualified longevity annuity contracts. Both of those are lifetime income products. Both of those are just like immediate annuities. They don't have any moving parts, no annual fees, no market attachments. They're straight transfer of risk products based on your life expectancy at the time you take the payment. Now, one of the calls I get all the time, and this is my Chester voice, Chester will call me and go, I'm not going to buy a single premium immediate annuity until interest rates go up. Stay in the annuity, man. And I say, dude, Chester, that's a good comment, but interest rates play a secondary pricing role. Life expectancy plays the primary pricing role at the time you take the payments. Now, yes, if Jimmy Carter interest rates were in play, the payments will be a little bit higher. But I also told Chester that if you're going to try to time the purchase of an immediate annuity, then you have to factor in the payments that you miss. So if Chester says, I'm not going to buy an immediate annuity now, I'm going to buy it 5 years from now, well, number one, the payments are going to be higher because why? Chester's 5 years older. Older you are, the higher the payment. Now, if interest rates move a little bit north, he's going to get a little bit more of a bump as well. But if Chester waits those 5 years and he's truly honest with himself, then he has to factor in those 60 payments, those 5 years of 12, that he missed before he waited to take that payment, and then factor in how long it's going to take to make up for the 5 years of payments that he missed. Makes sense? Logical, rational, mathematical, factual? It is what it is. Annuity companies have the big buildings for a reason. Why? Because they know when we're going to die. That's the reason property and casualty companies always come and go. I mean, one of the places I live is in Florida, and we're always dealing with hurricanes. And property and casualty companies come and go because why? They don't know when the hurricane's going to hit. Life insurance companies that issue single premium immediate annuities, they have the big buildings because they know when we're going to die and they price things accordingly. So it's a simple product. It's a guaranteed issue product, meaning you don't have to go through any underwriting or medical test or blood test or some nurse showing up at your house on a Saturday. You're going to get the single premium immediate annuity. You're going to be grouped into all of the other people at your age range and at your life expectancy. Some of you are going to live longer than others. Some of you are going to live shorter. Some of you are going to live forever. And the annuity company prices the product so that it's life expectancy based. So back in the Roman times, I mean, single premium immediate annuities, that was the first annuity type. It was a gift to the dutiful Roman soldiers and their families for all of the hard work and effort they did on the battlefield for the empire, and it was a lifetime income stream. That was the original single premium immediate annuity. It's been sold in the United States for hundreds of years, and it's a commodity product. I mean, it is a product that when people call me up and Chester says, what's the best immediate annuity, single premium immediate annuity on the planet? By the way, I do this because that's the phone, but they did a study with kids and they go, hey, what's it look like when you hold a phone? All the kids are like this. or this. They don't even know what that is. For you old people, that's the phone, right? I digress and I lost my train of thought, but the bottom line is that annuities are like a gallon of milk. And why do I say that? Why do I hold this jug of no milk, but it's a gallon of milk in my hand? Is because annuities are commodities. Well, I know what it was. Chester was asking me about the best single premium immediate annuity. Let me do my Chester voice again. What's the best single premium immediate annuity out there? I don't know that, Chester, until I quote it. Gallon of milk, because things change. Quotes change every 7 to 10 days. So I don't know that until we go quote all carriers. And my answer to Chester and to you is which is the best single premium immediate annuity? It's the company that provides the highest contractual guarantee for your specific situation, the customized quote that me and you decide upon, and that has the claims paying ability to back it up. What's the name of that, Stan? I don't know. I got to quote it. It's a gallon of milk. I throw the milk away. The milk jug hits the floor. Why am I being so dramatic about that? Is because you can't get caught up with just buying, I love this company, Stan. This is the company. No, you have to quote all carriers. Annuities are commodity products. Single premium immediate annuities, they change. Sometimes the quotes change. Sometimes carriers are being very aggressive and they want to attract money, and sometimes they are not. Similar to like when you drive down the road and you see a bank CD. 5-year CD, same CD with one bank is higher than the one across the road. Why? They're trying to attract premium. Now, the claims paying ability of the carrier is important, but most carriers that are in the single premium immediate annuity world are the monsters. They're A-rated or better, but we can go through that. And if you say, you know what, I don't want to buy anything but A++, that's fine. We'll quote just A++ for you. Or you can go to my site at theannuityman.com and you can quote them yourself. But I would encourage you to discuss it with me one-on-one. You can schedule a call with me and say, well, that sounds sales pitchy, Stan. Why would I want to do that? Because you're just going to hard close me and high pressure me. No, I'm not going to do that. But the reason that it's important for us to talk about that is with single premium immediate annuities, you can quote it a couple ways. You can say, hey, Stan, here's my lump sum. How much income will that create based upon the parameters that I give you? Or you can say, hey, me and the wife need $2,272 a month to fill in that income gap. How much money will it take? Either way, I can quote all carriers to find that best contractual guarantee. But the real reason we need to connect one-on-one on single premium immediate annuities is that there are so many ways to structure it. 30 to 40 depending on who's counting. You can do percentage survivor benefit, so where that if you die, it's joint life, they're going to get a percentage less of that or whatever. You can do it a myriad of ways. My point is, it's customizable. There's two questions I always ask people. What do you want the money to contractually do, and when do you want those contractual guarantees to start? That's the starting point for us. Now, once we get to the immediate annuity quotes, my questions become even more detailed. All right, tell me about your beneficiaries. Tell me what you want to happen to the money when you die, when your Learjet hits the mountain. Tell me if you want to attach a spouse or partner so that the income stream continues uninterrupted or unchanged. Or some people say, I don't want lifetime income stand with a single premium immediate annuity. I just want it to pay for a specific period of time. I just want a 20 pay or a 30 pay or a 15 pay or whatever. Bottom line, we can get you those quotes. Bottom line, there's no perfect answer. Oh, by the way, I've written a book on immediate annuities, single premium immediate annuities. Go to my site at theannuityman.com. Fill in your shipping address. We'll ship it to you, no cost, no obligation. I also have a podcast called Fun with Annuities that comes out every single week that you should listen to as well. Go to my site. There's a lot of stuff for you there that you can get informed so you can make a decision on your terms and on your time frame. And with that, hit the subscribe button. I'll see you on the next Stan the Annuity Man video.